Have you ever wondered, what would happen if the US owed China so much money that it could no longer escape? Sounds like a movie plot, right? But this is reality. China holds over $1 trillion in US debt. That's more than any other nation. And while we've been focused on headlines of trade wars and tariffs, China's been quietly weaving a web of economic power directly tied to US debt. Is this a trap, or is this a brilliant strategy? Let's explore. In today's video, we're diving deep into one of the most overlooked yet critical aspects of the US-China rivalry, the debt game. While everyone's talking about military power, tech dominance, and trade wars, China has been using US debt as a tool. This might just be the silent takeover that no one is talking about. But is the US trapped, or is there a bigger picture here? Stay tuned, because we're going to pull back the curtain and reveal the real stakes. To understand this, let's break it down. As of 2024, China holds over $1.1 trillion of US debt. You might be asking, why is that a big deal? Well, consider this. When a country holds that much debt, it essentially controls a part of the borrowing country's future. For the US, this means China has the leverage to influence key economic policies, even military and foreign policy in some cases. How? Let's take a closer look. US Treasury bonds are a cornerstone of global finance. When China purchases these bonds, it provides the US with the funds it needs to operate, paying for everything from infrastructure projects to military spending. But here's the catch. Because the US is so heavily reliant on these funds, China can potentially create instability by leveraging this debt. Ever heard of debt traps? Well, they exist, and China has mastered them. With a vast amount of US debt in its hands, China can demand certain economic, political, and even military concessions if it ever chooses to pull the plug. But wait, there's more. China isn't just a creditor. It's a strategic player. By purchasing US debt, China ensures that it's not only influencing the US economy, but also positioning itself as a dominant force in the global financial system. Debt has always been a powerful tool in international relations, and China is using it in a way that the US never fully anticipated. By owning such a large portion of the US debt, China could potentially exercise its influence over global markets, currency exchange rates, and even international alliances. The question is, how far is China willing to go with this leverage? Let's take a closer look at China's playbook. It's not just about holding debt, it's about managing debt. In countries like Sri Lanka, Pakistan, and Venezuela, China has extended massive loans with conditions that have ultimately led to debt defaults. When these countries couldn't pay back their loans, China took over their ports, infrastructure, and energy resources. This is known as debt trap diplomacy, and it's a key part of China's strategy. So what happens if the US falls into this trap? What if China decides to use its debt holdings to pressure the US on a global scale? If China ever decided to unload its US debt holdings, it could send the global economy into a tailspin. The US Treasury market would collapse. US interest rates would skyrocket. And the global financial system would be severely destabilized. This could lead to a global recession, with countries around the world feeling the ripple effects. By owning so much US debt, China has positioned itself in a place of immense power. But here's the flip side. If China pulls the trigger on this, it could backfire and harm its own economy. The stakes are incredibly high, and the world is watching. So, how is the US responding to China's growing influence through debt? Well, there's been some action, but it's clear the US is not moving fast enough. The US government continues to run massive deficits, issuing bonds to fund its operations. At the same time, there are increasing calls from policymakers to reduce reliance on China's holdings. The Federal Reserve has even begun exploring ways to move away from the US dollar's global dominance, but these efforts are still in their early stages. The problem is that any major changes could lead to market volatility and further destabilize the global economy. For now, the U.S. seems stuck between a rock and a hard place. China has also been making strategic moves to position itself as the future leader of global finance. The launch of the Belt and Road Initiative, BRI, has allowed China to extend its influence to dozens of countries by offering loans for infrastructure projects. These loans often come with strings attached, allowing China to gain control over critical infrastructure in regions around the world. If the U.S. doesn't act soon, China could further consolidate its hold on the global financial system, leaving the U.S. with little leverage. With the U.S. in debt and China positioning itself as the new global leader, the geopolitical landscape is shifting in real time. It's becoming clear that China's silent takeover isn't just happening in one region, it's happening everywhere. So is this just a debt trap? Or is China playing a smarter game than the U.S. ever realized? China's accumulation of U.S. debt might seem like a risky move, but in reality, it's an incredibly smart strategy. By using U.S. debt as a tool, China has placed itself in a position of dominance without firing a single shot. It's not just about controlling debt, it's about controlling the future of global finance. Through these debt holdings, China is securing a long-term advantage over the U.S., positioning itself as a global economic leader while weakening U.S. power. It's a strategy built for the next century, not just the next decade. And the U.S., it seems to be playing catch-up. China's strategy also includes leveraging its debt holdings in ways that no other country has done before. When China lends to developing nations, it doesn't just offer money, it offers influence. By financing infrastructure projects in places like Africa and Latin America, China is setting up a network of global economic dependence. This gives China the ability to shift global trade routes, affect international policy, and even impact the strategic interests of other countries. With the U.S. drowning in debt, China has the perfect opening to rise as a global superpower. The writing is on the wall, but is America paying attention? But the consequences of a U.S.-China debt crisis wouldn't just affect the U.S. It would send shockwaves through the entire global economy. Global markets are interconnected, and any significant changes in the U.S. debt structure would affect every economy from the European Union to Southeast Asia. China's role as the world's second-largest economy means that it has the potential to reshape global supply chains and even push for the de-dollarization of global trade. But there's a catch. China's own economy is also heavily reliant on the global system that the U.S. has helped build. If China plays its cards wrong, it could collapse the entire system, dragging itself down with it. The stakes are incredibly high, so is China's debt strategy a trap or a masterstroke? Could the U.S. be heading into a debt-induced crisis? Only time will tell. But the reality is clear. The U.S. can no longer ignore the economic leverage China holds. As we move deeper into 2025, the world is watching, and so should you. Stay informed, stay ahead, and don't miss out on what comes next. Let's keep this conversation going. Comment below, what do you think? Is the U.S. caught in a debt trap, or is this just another chapter in a much larger geopolitical strategy? Thanks for watching. See you in the next video.